Hello everybody, this is Opeyemi. Welcome to my Forex trading course. Remember the last time we talked about the market structure. I told you what the market structure is. So today we shall be taking a look at how to trade a trending market and support and resistance. How do we trade a trending market? The last time I told you we discussed how to draw a trend line, and we also talk about trend, and I kept making mention of a statement, which is what trend is your friend. So it is better to go with the trend than going off the trend. So trend is your friend. Now today, let's go into the topic of the day, which is how to trade a trending market. How to trade a trending market. If you can identify a trend market, it will be easy for you to trade it. If it is a bullish market, you will look for a buying opportunity, because you have to trade with the trend. Remember, I told you before, you have to trade with the trend. And if the market is bearish, you have to look for a selling opportunity. But the question is, what is the right time to enter a trending market? You know, there is a time, as I said the last time, there is a time to enter the market. There is a time to exit the market. There is a time to stay away from the market and not enter at all. So, trending markets are characterized by two important moves. This first move is called the impulsive move, and the second one is called the retracement move. When we say impulsive move, that's the major move, the move with the trend. That's the impulsive move. While the retracement is the move off the trend, because price does not go in one direction. You won't see price just going up like this, no. But what it does is that go like this, like this, like this, like this, and so on. That's the way price moves. It doesn't go in one direction. There has to be what we call the retracement. Now look at this. This is an uptrend. This is an uptrend. And see the move. See, impulsive move, retracement. Impulsive, retracement. Impulsive, retracement. Impulsive, retracement. So, market price does not move in one direction. So there is impulsive move, which is the move with the direction in the direction of the trend. Then there is retracement, or you can also call it pullback. So this is an uptrend. Can you see it? Now, as you can see, the market is making higher highs and higher lows, which indicates a bullish market. If you see this market, you will think of buying. But as you can see, the market is making two different moves. The first move is an impulsive move, and the second one is a pullback or a retracement move. I also call it call it corrective move. Corrective move. Now, professional traders understand how trending market moves. They always buy at the beginning of an impulsive move and take profit at the end of it. This is the reason why the market makes an impulsive move in the direction of the trend and retraces before it makes another impulsive move. Now, when do you enter a trending market? You enter at the end of the corrective move, at the end of the retracement. So that's when you enter, not at the beginning of the impulsive move. No. As I told you the other time, I said if you want to buy, you buy at the bottom and sell at the top. So you buy at the bottom and sell at the top. Because if you buy at the top, thinking there will be a breakout, you might be the thing by retrace and hit your stop loss. So it is better to buy at the bottom, and not just the bottom, the end of the retracement. You buy at the end of the retracement and at the beginning of the impulsive move. If you are aware of how trending markets move, you will know that the best place to buy is at the beginning of an impulsive move. Traders who buy an uptrend market at the beginning of a retracement move, they got caught by professional traders, and they don't understand why the market hints their stop loss before moving in the predicted direction. See another example. Now, I'll show you an example right now. The same thing I was saying. See, you don't buy at the top. You don't buy at the top. You buy at the bottom. That is at the beginning of an impulsive move. That is when you buy. Then you sell. You also sell also at the beginning of an impulsive move. So don't make that mistake of buying at the beginning of a retracement. There may not be a breakout. Now look at this. This is a downtrend. And you see the move, impulsive retracement, impulsive move, then the retracement, impulsive move, retracement move, impulsive retracement, impulsive. Why? Because it's going down. So as it's going down, it's also going up a bit. But what is it giving us? We have these are the highs, these are the lows. So it's giving us lower highs and lower lows. Because that's what we have when in a downtrend. You have lower highs and lower lows. The illustration above shows a downtrend market. As you can see, the best trading decision is to sell the market at the beginning of an impulsive move. If you try to sell in the retracement move, you will be trapped by professional traders. You will lose your trade. The most important question is how to identify the beginning of the impulsive move to enter the market in the right time with the professional traders. and avoid being trapped by the retracement. To predict the beginning of the impulsive move in a trending market, you have to master drawing support and resistance. Now, this takes us to support and resistance. What do we call support? What do we call resistance? You can see in previous lessons I've been mentioning support and resistance. Now, let's go to support and resistance now. Support and resistance. Support and resistance are proving areas where buyers and sellers find some equilibrium. They are major turning points in the market. Support and resistance levels are formed when price reverses and change direction. And price will often respect these support and resistance levels. In other words, they tend to contain price movement until, of course, price breaks through them. In trending markets, support and resistance are formed from swing points. In an uptrend, the previous swing point acts as a support level, and in a downtrend, the old swing point acts as a resistance level. Now, what have I been saying? Look at this. And see the lines, the horizontal lines. Those are the swing points. Those are the support and resistance. Now, see this red line. This. That's a swing point here. Why? Because there was a reversal here. So that was a swing point. Then went up. These are another swing points. You can see that resistance here. Here it was support. Then see another swing point here. Look at the red line. Let me so you can see very well. Look at the swing point. See. This represents a resistance here. And here it was a support. And see it's the same line. The same line. The same price. It may not be exactly the same, but the same area. So you can see the price acted as support here. Acted as support here before continuing up. Same thing happened here. It was a resistance here, and it became support here. Resistance here and support here. Why? Price stood on this line before going up. That's what we call support. Support is the down. No, when price is going down and it suddenly reverses, that's what we call support. While resistance is when price was going up, then suddenly it reverses and started going down. That point it reverses and started going down is what we call resistance. So you can see it was a resistance here and a support here. Before it continued up. So it was acting as support and resistance. Why? Because this is a trend. This is a trend. Support level, and see support level, support level, support level. Why? Because this is an uptrend. So that is how you can identify. Now, let's say you want to trade this. You want to trade it. You wait for the pullback. Let's say price was here. Price was still here. You wait for it to come back here to this line. This you wait for it to this resistance here to turn to support here before you enter. And it went up. That's how to trade a trending market. The illustration shows how the previous swing points act as a support level after the breakout. When the market makes the retracement move, it respects the previous swing point, which is the support level, which will represent the beginning of another impulsive move. As you can see, when the market tests the previous swing point, that's support level, it goes up again. By drawing a support level in an uptrend market, we can predict when the next impulsive move will take place. So support and resistance. Support in an uptrend, drawing support and resistance can help us predict when we enter the market in order to continue with the trend. Look at this. This is the opposite. This is a downtrend. This is a downtrend market. Look at it. And see the swing point, the resistance level. And you see the red lines. See, look at it. So, you can see the move began from here. Then it broke this and went down. So we would have seen at least 3 before you confirm. What did I just draw now? That's a trend line. So a trend line can also help us do it. If you draw a trend line, it will show you the clear picture of what is happening. So there was a swing point here. There was a swing point here, here, and here, and here. So this acted as support here. You know that our next move will be to enter when it's as resistance level. So meaning we will enter from here. From here. We enter from here. So that's where we enter from. So when you enter from it, you can see that price went down before making another retracement. It went down. So as I told you before, price does not just move in one direction. There is always a pullback. So that pullback That's where you enter. I told you before, we discussed how to draw a trend line. Trend line will help better. So if you draw the trend, you draw the trend line. So as price goes to the trend line, then you can enter. You can see. Look at it here. Immediately it got here, it reversed. So you can use this to enter. You can enter here. Once price touches this trend line, then you sell. And as you can see, it went down. Retrace here again. Went up. Then you sell here. You sell again. That's using trend line. You can also use support and resistance. But if you can also use both to confirm. So that will give you a better probability, to give a better trading probability of making profit. So when you have drawn support and resistance, you also drew trend line. So that will confirm your trade for you. So if you are new to this channel, please make sure you subscribe to my channel. Hit the like button and click the notification bell so that when I post the next video, you get the notification. And if in case you need the previous lessons, please go to the description and click the link. You get the previous lessons there from lesson 1. This is lesson 14, so we started from lesson 1. So click the link in the description to get the other lessons. See you in the next lesson. Bye bye. Now, the illustration shows us how the market respects resistance level when price approach the previous swing point. Resistance level. The market makes an impulsive move. If you understand how price action acts in a trending market, you will predict with high accuracy when the next impulsive move will begin. As you can see, I drew a trend line. A trend line can help you do that. Another way to catch the beginning of an impulsive move is by drawing a trend line, just as I've been saying before. Trend line will also help. So when you draw a trend line, it makes it easier. So you know when to sell in a downtrend and when to buy in an uptrend. See you in the next class.